Gold holds near 3-week lows ahead of Fed rate cut. Gold prices stabilized near 3-week lows on Tuesday as traders positioned for a widely anticipated Federal Reserve interest rate cut, while easing U.S.-China trade tensions continued to sap demand for the safe haven metal. Spot gold edged up 0.2% to $3,957.42 per ounce as of early Wednesday trading, after hitting its lowest level since October 7. U.S. gold futures for December delivery traded slightly lower at $3,977.76 per ounce. The precious metal has retreated sharply from record highs above $4,380 reached on October 20, representing a correction of roughly 10% from peak levels. Fed decision takes center stage. The Federal Reserve is widely expected to cut interest rates by 25 basis points when it concludes its two-day policy meeting Wednesday, with market participants pricing in a 98% probability of the reduction. The anticipated cut would lower the federal funds rate to a range of 3.75% to 4.0%, marking its lowest level since late 2022. While lower interest rates typically support non-yielding assets like gold, investors are focusing on forward guidance from Fed Chair Jerome Powell. Powell recently signaled potential concerns about labor market softening, suggesting the central bank may continue its easing cycle. However, if Powell indicates that future cuts may be delayed or inflation remains persistent, higher real yields could further dampen gold's appeal. Trade optimism weighs on safe haven demand. The recent pullback in gold prices has been largely attributed to progress in U.S.-China trade negotiations. Top economic officials from both countries reached a preliminary framework agreement over the weekend that would pause American tariffs and Chinese rare earth export controls. U.S. Treasury Secretary Scott Bessent confirmed that Trump's threatened 100% tariffs on Chinese goods are effectively off the table. President Donald Trump and Chinese President Xi Jinping are scheduled to finalize their trade agreement at a summit in South Korea on Thursday. The prospect of reduced geopolitical tensions has diminished demand for safe haven assets, contributing to gold's retreat from recent highs. The fuel for this short-term correction in gold is a readjustment of safe haven instruments towards more responsive instruments like global equities due to trade optimism, said Kelvin Wang, senior market analyst at OANDA. Despite the near-term pressures, Wang noted that the fundamentals are still bullish for gold. Other precious metals also remain subdued, with silver futures gaining 0.3% to $47.45 per ounce and platinum futures falling 0.6% to $1,575.80 per ounce. Gold has climbed approximately 42% year-to-date, supported by geopolitical uncertainties, rate cut expectations, and sustained central bank purchasing.